Hello everyone, this is Dan Veru from Palisade Capital with a market update on Wednesday, May 14th. So much has happened since my last video just 2 weeks ago. Earnings season is over, tariffs with China have been modified, and Congress is debating a comprehensive tax bill, while the President is on his first major international trip to the Middle East. First on earnings season. Corporate profits were much better than expected, and the outlook was far better than feared. Companies seem to have been prepared for the possibility of tariffs. When looking at the S&P 500, more than 78% of the index reported earnings that were better than expected, and future guidance was also better than feared, a welcome relief for investors. In the short run, stocks respond to a variety of factors, but over the long run, it's corporate profits that drive stock prices. On tariffs, the world is in a much better place than we were just days ago. When tariffs were first announced, it had the potential to be a $650 billion drag on the U.S. economy. After negotiations between representatives of the U.S. and China concluded, tariffs were dramatically reduced for a 90-day period to allow for an agreement to be negotiated. As it stands today, tariffs are about a $300 billion drag, a dramatic improvement. On the tax bill, the House is advancing an extension of the 2017 Tax Act with additional pro-growth incentives. While the bill seems to be gaining some momentum, it's too early to do a deep dive on it until additional details come out. But this is no doubt the next significant milestone for financial markets. Lastly, the President brought a delegation of top CEOs to a conference in the Middle East. Many of our largest companies are announcing significant deals with countries in the Middle East, covering a variety of different industries like aerospace, defense, and technology. We've been through a very volatile period for stocks and for bonds, but the economy is in a much better place today than it was a week ago, with the risk of recession down considerably, while inflation pressures seem to continue to abate. That could create a pathway for the Federal Reserve to lower interest rates in its June meeting. Thank you for listening today, and feel free to call us with any questions or concerns.